Vikas Agrawal this side. Today we'll learn that in this falling market, how you can identify which are the stocks in your portfolio that you should eliminate or exit from that, and you should keep maximum 5 stocks in all situations to make big money. This is my philosophy, or I have heard from many big investors also. Maybe you can not agree with that, but what I feel is that 5 stocks maximum, or if you have a huge capital, then maybe 10 stocks. But if you are keeping some 70, 80 stocks in your portfolio, you are not going to make a big money, because even if you get one or two multi-bagger, your allocation of money in that stocks would be very small. So always try to keep minimum number of stocks and do pyramiding. Pyramiding means the stocks which are giving you positive return, going upward. Put your money from the losing stocks in that stocks. So that is called pyramiding. So today we're going to learn that 4 types of strategies or systems, or 4 ways in by which you can identify that which are the stocks in your portfolio or you are going to buy, that you can check these 4 parameters, and based on that you can decide whether you have to stay in that stock or you should exit. This will help you. You can try it. This is not like something you have to do, but whatever I am doing, I will show you that 4 ways. These are very simple things, anybody can apply. It will not take much time. Whenever you are buying some stocks, just 5-10 minutes you give, and these 4 things you see, your errors will be drastically reduced. I can guarantee that. And your profit and your probability of profit will increase multifold. So one by one I'll go through. These are very simple and basic things. Many times you have heard, but consolidated you can write in backside of your trading desk, or whenever you are taking decision. If that is not the dinner table, then you can paste it, these 4 things, and always watch this 4 before entering into any stock. Or if you have already many stocks, this is falling market, your stock can crash to any limit. Before that you should check it and exit from the stocks which are under these categories. So first thing is EPS growth, the basic thing of stock market, and the stock market works only on EPS. There are 3 things on which stock market works: earnings, earnings and earnings. If any business is not making any earning, why you will invest your money in that? Even if you are investing for your lifetime, 10 year, 5 year, 1 year, or even for 1 month, you try to put your money in stocks which are giving you EPS growth, because share price is made with 2 things only: P ratio multiplied by EPS. So EPS is growing means your share price will increase. If P ratio is increasing, your share price will increase. But P ratio increases when in the bull market. This is the price of your share, that is made with 2 components: P ratio multiplied by EPS, earning per share. So if your EPS will grow na, that will give you double engine ki sarkar. How I will explain you. Suppose your stock is having a EPS, earning per share. Your stock is suppose Zomato, and Zomato is earning 10 rupees behind per share, earning per share. Now the P which suppose your market is giving is 20. 20 ka P means for 20 years people are now ready to pay you for the same EPS. So 20 multiplied by 10 means your stock will be having some price of 200. Suppose this is the stock price for any stock, leave Zomato. Now suddenly next year your stock price EPS increases to 15. How much? 15 means your earning per share growth is 50%. How much? 50%. Now the market will give you higher P, because your EPS is increasing. There are very many minimum company which are good also, means ROE is also good. ROE, return on equity, that number should be more than 15 for any company. That is the criteria I want to see. Okay, so that should be more than or equal to 15. Now if that company is growing with that 50% EPS growth, how much 50% growth is there in EPS? your stock will get more P. So that P ratio will increase to 30. And also P expansion. This P has expanded. Now, this P expansion takes place in bull market, not in the bear market. Bear market, most of the stocks will be contracting. P will contract. So this is the phase of bull market. With bull market, your EPS is also increasing. Now your stock will be multi-bagger. This is called multi-bagger. Now if you start checking this EPS is growing or not, at least you will find out that whether your stock is having EPS growth or not. Anyway, now bear market is there, so you can expect that P contraction will be there. At least your EPS growth will support your stock price, so it will be sideways. Suppose this is anyway decreasing, again it comes to 20 because of that bear market. Now this has increased to 25, suppose, because of that EPS growth. Then also your stock will be rising or maybe sideways. So at least ensure that your EPS is increasing. This is one simple thing that you can do before anything if you don't know anything. So that how to check, go to screener.in, write in Google any stock name like Zomato. Last time also I shown you Zomato, then write screener.in. The first thing which will come is this one, screener.in. This you open, then this page will come for that stocks. In bottom you come and see that quarterly and annually. This is quarterly. First thing is quarterly, and second thing is here that annual thing will come. Annual, annual. Here this one, profit and loss. So profit and loss, EPS, you can see here it was minus. Zomato, it was minus, and suddenly you see this minus 23,000 has become minus 1.54, and now it has become positive also, and it is increasing only. 0.4 to 0.8 means double. This number is double. 0.4 to 0.8 means almost doubled. That is the growth Zomato is showing annually. Annual growth is there, EPS. That's why stock is rocket. But quarterly, you see, quarterly up to here, this was negative. Then suddenly in June 2023, if you see June 2023, this period, this time your stock's EPS turns positive. Your stock EPS turns positive, and then from there it has increased like anything. Now it has decreased in this quarter. But before that you can see 0.04 has become 0.16, means 4 times in one quarter, 4 times. And here also you can see a jump, and here you see from minus to positive. So in this June 23 only stock has given breakout in the charts. If you go to the charts, this is my video is uploading. So Zomato, if you see here 29th May or June, July time only this breakout happened. So fundamentals also works in stock market. So always see that EPS is growing. When EPS will start decreasing, here you see EPS has decreased, so your stock will be sideways or it will fall. Your stock will be sideways or it will fall. So you can see stock has become sideways. So always see EPS growth should be there in your stock if you want to earn from that. First thing is this one. Next is stage analysis. Stage analysis is given by Stan Weinstein in this book, Secret for Profiting in Bull and Bear Market. Very small book, you can easily read. I must suggest you read this once. Your stock market looking at charts will be changed for your lifetime. This book will help you lifetime. So here that stage is shown. There are 4 stages in any stock's life. These are that 4 stages you can see. So stage 1 is accumulation zone. Here that big players accumulate the stocks from retail players by making bad news. In Infosys chart, if you would have seen Infosys, there were many bad news coming when stock was already down from its high. It made a high of some 1900 here, 1900, and then the stock fall down up to around 1300 for, or maybe lesser than that. This is here you see stock went up to around 1900, then it has fallen up to 1395. Then this bad news comes. What has come? Bad news, and stock has a major gap down, and on that gap down day a big volume comes, and some big players are buying. Here you see this candle, you can see candle has made a low, then from this point buying started, and candle has been closed in positive. Again here one big gap down happened and one big volume is there. So this is the accumulation, like big players are accumulating the share, then stock has never gone below this, and it has made, now it has come back to 1900. So this was the accumulation zone. So what you have to do, you have to make the chart weekly chart. You have to make any chart weekly chart, then you will clearly see four stages of the stock. So in Zomato example also you see this was stage 3. So we were discussing here now, stage 1 accumulation happened, then a breakout happened with heavy volume, then stock goes up with higher high higher low, then again stock becomes sideways for distribution, either distribution or accumulation. Big player will either distribute its share to retailers or it will again accumulate for future growth. If it break out this side, this was the accumulation, and again stage 2 will start. If this is distribution, then it will break down bottom side and stage 4 will start. If the stock is in stage 4, never hold. This book tells never hold a stock in stage 4, and in current scenario most of the stocks are in stage 4, but people are reluctant to sell. They are telling me that we will not sell because again this will come to stage 2, but I am telling you sell when the stock just come to stage 4 here at this point, and then when the stock will finally end its downturn and make a sideways move, consolidation like this, and breakout happens, then again you can buy. There will be lot of time, but you should not be in hope that it will someday it will come again. It may not come for 3 4 5 10 years. So you should always be careful that you are not hopeful. This is a quote by Vikas Agarwal. Thank you. So stage 1, stage 2, stage 3, stage 4 you may have understood. Otherwise you can read this book also, very good book. And in this Zomato example also you can see that this was the stage 3. Then stage 4 came. Somebody would have agar sold at this point itself, that this has broken this line and I will sell this time. Then I will again buy at this point. Do not hold this much period. It can fall to any limit. It can become next Yes Bank. You don't know. So here it has given breakout. Even if you would have bought this area, that it has given breakout and EPS has now become positive, you will gain much more. Okay? So this is simple things that works. This was the stage 1, this is stage 4, this was stage 4, this is stage 1, and again stage 2 started, and you see stage 2 how long it has gone. Stage 2 means like this rocket. You know rocket science, I can teach you that someday. Next is 30-week moving average. Very simple thing but very powerful things. Indicator don't works, but some indicator works if you know how to use it. Here you see that Tata Motor will see and Zomato will see. So here you see that if we apply a 30-week moving average, simple 30-week moving average, and we'll decide if the stock goes below this, we will get down. So here this is Zomato example of daily. We have to make it weekly chart. Now you see weekly chart. You would have taken entry after the breakout and you would have not exited if this simple rule you will follow. Otherwise you would have exited multiple times. Like we die for 100 times in life now by fear. This is stock market will daily afraid you, like I shown you Infosys example. If you do not have any system of exit, market players will make you fearful like anything. They will bring n number of bad news and you will sell your stock. Multi-bagger you leave. You cannot hold a stock for 5-10 years or 1 year. 1 year itself is very difficult. You see how many times this stock is going down. You may be thinking that this is the end of this rally. This candle would have offered many technical analysis, but this candle closed above the 30-week moving average. Now again this candle is making people afraid na, that whether this stock will go down or up. But if you have some system that if it closes below this 30 week, like today is Thursday, tomorrow is Friday, if tomorrow this candle closes below this, I will get out by anyhow, like I will not think whether it is going up or not, this is my system, I will follow. Then you have a system, at least you will follow next time also this much rally. So make a system. It can go up, but you should not play with your system. Once you made a system that 30-week moving average, I am getting out. If weekly candle close below that, you are getting out. You have to stick with your rules. Okay. Cheta. In Kerala, bhaiya we call cheta. So, ठीक है cheta. Always follow your rules. If you have made some rules, follow that, then only you will be having courage to ride the trend. Trend is your friend. That saying is easy, but how to do it? By making some rules. Now next example, you see Tata Motor. Many people are stuck in this. They are telling मेरे करण अर्जुन आएंगे. अरे आएंगे आएंगे करण अर्जुन यहाँ से ही अगर, sorry, Hindi, no Hindi, English. From here, if somebody had taken entry, I will tell you, make a simple rule of 30-week moving average. If here you see, he would have exited easily na, this point. Now at least he will be saved for this many points. Now people are stuck, they don't know whether to hold or buy. Let it fall. This is stage 4. It will make some stage 1 somewhere, and it will again break out and it will go. I have seen history of Tata Motor. It will consolidate for long time. People will forget the stocks, then it will give breakout. You see here what happened. This was the consolidation zone. I will show many consolidation zone to you. Tata Motor. This are indicators. This you see in daily chart. You see how many days it actually gives. This is weekly chart, na. Oh, just a second. We'll show you that Tata Motor example. That Tata Motor, how it make that rectangles. You see here one rectangle was formed. This you see, this was the, if you can have patience and you wait for breakout, here you will entry. Okay. Now this second one you see, this and this is nicely made. If I can use some triangle of this from this pattern, this will be nice. This straight trend line. This was the trend line. अरे यार हो जा भाई. This was the trend line. This breakout with that gap up. Okay. This trend line broken and again stock become rocket. This you see. This was the then again here you see again one rectangular pattern. Okay. So this is how your stock performs. It goes up like that. So you will get many chance. You don't be in hurry, and it will give false breakout also. You have to bear with that false breakout also. You see here it has given false breakout and it failed. That was the easy sign that you have to get out, because if somebody is playing with you by making this breakout, and then many retail people would have stuck here, then it is going down. At least here somewhere you should exit. But people are holding just in hope that Tata Motor 70 to 1100 it has gone. But earning you see na, EPS is now down. All car sales are down, and this is cyclical stock. Cyclical stocks go in cycles. When earning goes up, they will, like this it will go. So earnings will go up and then after some time they will fall down. Then again they will go up, like that only cyclical stocks works. So you have to understand that also. So this follow this simple rule. This is 30-week moving average. The last is, many people will tell PE ratio don't works, but at least you don't buy something which is at PE of 50. That means you are giving the stock too much high price. With that bear market and falling market, as I told you, PE contraction happens. And when PE contraction happens, even with EPS growth also, your stock may correct a lot. If EPS growth is not there, then if PE is also very high, PE 70, 80, 90, 100, and your EPS suddenly starts falling, then the stock will be crashing like anything. That happened to many stocks. Don't see PE ratio of Tata Motor. Tata Motor is a cyclical stock. For cyclical stock, PE ratio is entirely different. PE is price divided by earnings. Price divided by earnings. For cyclical stocks, when earning is at the peak, this cycle will be there na. So this earning will be peak at somewhere here. So at this point, when earning is at peak, suppose this is at peak, suppose this is at infinity, suppose you make infinity, then what will be the value? You can understand that will be the lowest P ratio. So that is the time to sell. When P is low, that is the time to sell for cyclical stocks. And when it will be here, when earning will be very less, like earning will be zero, then P ratio will be infinity. So that is the time to buy. So for cyclical stock, P ratio is ulta. Cyclical means the stocks which are like businesses which are dependent upon market cycles. When recession will come, nobody will buy cars, their car sales will be down. So now you see car sales are down. So that is the period. So it has started falling. So that I have made I will make a separate video in Hindi. I have made a separate video for cyclical stock. Just I am promoting my Hindi channel also. Dukandari. Okay, so hope you like the video. You are not liking the video, you subscribe the video, like the video, then only channel will run. Otherwise it will die, because our channel's P ratio is very low. So you should buy this. This is the opportunity, my dear friend. All the best. We'll see you in next video.